Hey everyone, welcome back to Stock Analytics. If you're new to the channel, make sure you hit that subscribe button and enable notifications. That way you won't miss out on any of our deep dives into the most interesting companies and stocks out there. Today we're taking a deep dive into Recursion Pharmaceuticals, a clinical stage biotech company trading under the ticker RXRX. They're aiming to completely revolutionize drug discovery using AI and automation. So the big question on our minds is this: would Warren Buffett invest? Let's explore Recursion and see if they pass the Buffett test.
You know, what really stands out about Recursion is their unique approach to drug development. It's not your typical lab setting. They've built this system they call the Recursion Operating System. Recursion OS for short.
Recursion OS.
Yeah, it's pretty wild. Imagine a massive automated lab where robots are carrying out thousands of experiments at a time, generating mountains of data on biology and chemistry.
Robots running experiments, that's incredible. But how does that actually translate into finding new drugs?
That's where the AI comes in. They feed all that data into machine learning algorithms. These algorithms can sift through and analyze the data in ways humans simply can't. It's like they're using AI to supercharge the entire drug discovery process.
So it's not just robots, it's robots with brains. Or should we say artificial brains? Sounds pretty cutting edge. But how exactly does Recursion make money from all of this?
Right now, they have a few different revenue streams. One is through collaborations with some major pharmaceutical companies, think Bayer, Takeda. These partnerships involve upfront payments, milestone payments if certain goals are met, and even potential royalties down the line if a drug is successfully developed and commercialized.
So they're partnering with the big players. That's smart. What else?
They also license their technology to other researchers and companies through a platform called RXRX.ai.
RXRX.ai.
It's like giving others access to their superpowered lab and tools, for a fee, of course.
So they're kind of sharing their expertise. I like it. But ultimately, the big payoff will come when they develop their own drugs and bring them to market, right?
Yeah. You got it. That's the end goal. They already have several drug candidates in different stages of clinical trials. They're focusing on conditions like cerebral cavernous malformation, neurofibromatosis as well. If these trials are successful and they get regulatory approval, we could see some serious revenue coming in from direct sales of their own drug.
Okay, so they're definitely playing the long game. But let's be real, the biotech world is a tough place to be. It's incredibly competitive, and there are tons of hurdles along the way. What's the overall landscape like for a company like Recursion?
You're not wrong. It's a high-stakes game. Drug development is incredibly expensive. It takes years, sometimes even decades. And then you have all the regulatory hurdles to clear. The FDA doesn't mess around.
Definitely not.
You've got massive pharmaceutical companies with deep pockets. And then you have all these nimble startups trying to disrupt the industry. So yeah, competition is fierce.
It sounds like you need nerves of steel to be in this industry. But I have read that the overall pharmaceutical market is booming right now.
You're absolutely right. The demand for new treatments is huge, and it's only growing. The global market is projected to expand significantly in the coming years, so the rewards are potentially enormous if you can navigate the challenges, that is.
So the potential is definitely there, but how does a company like Recursion set themselves apart in such a crowded field? What's their secret sauce?
Well, their Recursion OS platform is a major differentiator. It's a radical departure from traditional drug discovery methods, and their use of AI and automation could give them a real edge in terms of speed and efficiency.
Makes sense.
And you can't ignore the fact that they're riding the wave of two huge trends in healthcare: artificial intelligence and personalized medicine. These are areas attracting billions of dollars in investment, and they're transforming how we think about treating diseases.
I'm starting to see why Recursion is getting so much attention. But let's get back to our big question. Would Warren Buffett invest? One of his key principles is investing in companies with strong management. How does Recursion stack up in that regard?
That's an interesting question. The CEO, Dr. Christopher Gibson, has a solid background in biotech. He really understands the science. But the company itself acknowledges that they're still figuring out how to manage such rapid growth.
So that's a potential area of concern for a seasoned investor like Buffett.
Yeah, I think he'd want to see a more experienced leadership team at the helm.
That's fair. But what about their focus on ESG? Environmental, social, and governance factors. Wouldn't that be a plus in Buffett's book?
Definitely. Buffett is a big believer in sustainable and ethical business practices. So Recursion's commitment to ESG would likely be a point in their favor.
Okay, so they're checking some of the Buffett boxes. But now let's dive into the numbers. Another key tenet of Buffett's investment philosophy is strong financials. So what's the financial story with Recursion?
Well, it's important to remember they're still an early-stage company. They're investing heavily in R&D, which means they're not profitable yet. In fact, they're operating at a loss.
Not exactly music to a value investor's ears.
Yeah.
I'm guessing profitability is still a ways off.
It's going to take some time, that's for sure, but their revenue is growing at an impressive rate.
That's good to hear. But before we go any further, let's take a quick break and remind our listeners to check out the Stock Analytics YouTube channel. We love hearing from you guys, so drop a comment below and let us know what stocks you want us to deep dive into next. And don't forget, the source material for this episode is linked in the description below. It's a Google Doc packed with all the juicy details about Recursion. Now, back to the numbers. We were just talking about their financials. And any other key metrics we should be aware of?
Well, their debt-to-equity ratio is pretty low, meaning they haven't been relying heavily on borrowed money to fund their operations. That's a positive sign.
Definitely.
But their free cash flow is currently negative.
Now, for those who aren't familiar with the term, free cash flow is essentially the cash a company has left over after paying for its operating expenses and capital expenditures. Kind of like when you look at your personal budget. If you're spending more than you're earning, you've got negative cash flow. Not a great situation to be in.
Exactly. It's something investors watch closely, especially when it comes to growth companies like Recursion.
Yeah.
And on top of that, they have a negative EPS, earnings per share, which basically means they're losing money on each share of stock.
Yeah, not ideal.
But again, this isn't unusual for a company at this stage of development.
Okay, so financially speaking, Recursion presents a bit of a mixed bag. High growth, no profits yet, low debt, but negative cash flow. Classic high-risk, high-reward scenario. It's the kind of thing that can either make you a lot of money or leave you with a pretty big hole in your portfolio. So what's the verdict so far? Would Warren Buffett be pulling out his checkbook for this one?
Well, there are certainly aspects of Recursion that align with his philosophy. They operate in a large and growing market. They're focused on cutting-edge technology, and they seem to be committed to ESG principles.
Sounds promising.
Yeah.
But I bet there are also some yellow flags, right?
Absolutely. The lack of consistent profitability would definitely be a major concern for someone like Buffett. He's all about investing in companies that have a proven track record of earning money year after year. And Recursion, well, at this point, there's still more of a bet on the future.
Right. He's not exactly known for taking big gambles on unproven businesses. And we can't forget the inherent risks that come with drug development. I mean, it's a long and expensive process with no guarantee of success. Even if a drug makes it through clinical trials, there's still the whole regulatory approval process to navigate, which is no walk in the park.
No, it's not. It's a high-stakes game, and even the most promising drug candidates can stumble and fall along the way. And to add to that, Recursion is likely going to need to raise more capital down the line to keep their research going, to keep the lights on. And that often means diluting the value of existing shares, something Buffett tends to be pretty cautious about.
So yeah, it sounds like a mixed bag, even for someone with Buffett's experience and insight. But there's another twist to this story, isn't there? Recursion recently merged with another AI drug discovery company, Exscientia. That seems like a pretty big deal.
Oh yeah, it's a bold move for sure. The idea is to combine forces and create a real powerhouse in the AI drug discovery space. They're pooling their resources, their technology platforms, and their drug pipelines. It's a way to potentially accelerate their progress and make themselves even more attractive to investors.
I see. Two heads are better than one, right? Especially when those heads are powered by artificial intelligence. But merging two companies, especially in a field as complex as biotech, I mean, that can't be easy. What are some of the challenges they might face?
Well, merging any two companies comes with its own set of hurdles. But when you're dealing with sophisticated technology, cutting-edge scientific research, and trying to blend different company cultures, things can get complicated. Integrating their operations, their systems, their teams, that all takes time. And there's bound to be some bumps along the way.
Yeah, I can imagine. And then there's always the potential for clashes in leadership styles or company culture. Those kinds of things can make or break a merger.
Absolutely. It's definitely something to keep an eye on.
So it's a high-risk, high-reward situation, kind of like Recursion itself. We'll have to wait and see how it all unfolds. But speaking of risk, what's the overall sentiment toward Recursion in the market? Are investors feeling bullish or bearish?
If you look at insider trading activity, it paints a bit of a mixed picture. Some insiders have been buying up RXRX stock lately, which you could interpret as a vote of confidence. But on the other hand, there have also been some insider sales, which might suggest some uncertainty about the company's future. It's not always easy to decipher these moves, though. Insiders could have personal financial reasons for buying or selling that have nothing to do with their outlook on the company.
Yeah, it's always fascinating to get a glimpse into what the insiders are doing, but
Yeah.
it's just one piece of the puzzle. Ultimately, you have to do your own research and make your own decisions. What makes sense for one investor might not make sense for another. It all comes down to your individual risk tolerance, your investment goals, and your time horizon.
Couldn't agree more. Investing is not a one-size-fits-all endeavor. You need to really understand the company, the industry, and your own financial situation before making any investment decisions.
Absolutely. But speaking of understanding the company, there's one more crucial aspect of Recursion we need to explore. Their financials. They're a young company, so they're not exactly rolling in profits, but let's take a closer look at the numbers and see what insights we can glean. Are you ready to crunch some numbers?
Always. Financials are the foundation of any sound investment analysis. Let's dive in.
Okay, so let's break down these financials. We know they're not profitable yet, but what are the key takeaways from their recent performance? What should investors be paying attention to?
Well, one thing that really stands out is their revenue growth. I mean, they've gone from just over $2 million in revenue back in 2019 to over $44 million in 2023. It's a pretty impressive jump.
Yeah, that's definitely some serious growth.
Yeah.
But it's important to remember that they started from a pretty low base. So those early growth percentages can be a bit misleading. What about their path to profitability? Are they getting any closer to breaking even?
Not just yet. They're still operating at a loss. Their profit margins are actually negative, meaning they're spending more than they're bringing in, which, as we've discussed, isn't all that unusual for a young biotech company that's heavily invested in R&D, but it's definitely something to keep an eye on.
Okay, so the growth story is compelling, but the profitability picture is still a little unclear. What about their debt situation? Are they racking up a lot of debt to fuel this growth?
Actually, no. Their debt-to-equity ratio is relatively low, which suggests they're not overly reliant on borrowing to finance their operations, so that's a good sign. It indicates they're managing their finances responsibly.
Okay, so they're not building their business on a mountain of debt. That's reassuring. But what about their cash flow? Are they actually generating cash from their operations?
Unfortunately, not at this point. Their free cash flow is currently negative, meaning they're not generating enough cash to cover their investments and operating expenses, which again is a common challenge for young companies, but it's something investors need to consider. It could mean they'll need to raise more capital down the line, which, as we've discussed, could lead to dilution of existing shares.
Right, and that dilution is something that tends to make investors like Warren Buffett a little bit nervous.
Yeah.
So even though they're growing and keeping their debt under control, the lack of positive free cash flow is a bit of a red flag. It really does seem like Recursion is a mixed bag when you look at their financials. High growth, but no profits. Low debt, but negative cash flow. The classic high-risk, high-reward scenario, it's what makes investing so exciting, but also a little bit scary.
Exactly. It's a balancing act. But let's shift gears for a moment and talk about the core of their business, their drug pipeline. This is where the real potential lies. For any biotech company, their success ultimately hinges on developing safe and effective treatments.
And those clinical trials are the make or break point, right?
Yeah.
They need to prove that those drugs actually work and get the green light from regulators.
Absolutely. If they hit a home run with even one of their drug candidates, it could be a game changer for the company. But the path to drug approval is long and expensive, and there are no guarantees.
It's definitely a high-stakes gamble. So as we wrap up our deep dive into Recursion Pharmaceuticals, let's go back to our original question. Would Warren Buffett invest in this company, given everything we've learned? What do you think?
You know, it's hard to say for sure. Only Warren Buffett truly knows what goes on in that brilliant mind of his. But based on his investment philosophy and what we've seen with Recursion, I'd say it's probably not a classic Buffett pick. He really favors companies with a long history of profitability, a durable competitive advantage, and a clear path to continued success. And while Recursion is certainly innovative and operating in a promising industry, they don't quite fit that mold just yet.
That makes sense.
Yeah.
Buffett is famous for his patience and his preference for sure bets over more speculative investments. And Recursion, at this stage, still has a lot to prove.
Exactly. But that doesn't mean it's not a worthwhile investment for others who might have a higher risk tolerance and a longer time horizon. It all depends on your individual investment goals and your overall strategy.
Well said. And that brings us to the end of our deep dive into Recursion Pharmaceuticals. If you're interested in learning more about this company, be sure to check out the full source material linked in the description below.
And of course, don't forget to subscribe to Stock Analytics and hit that notification bell so you don't miss any of our future deep dives. We've got some great episodes lined up for you.
Thanks for joining us, and until next time, happy investing.